recorder. Welcome to this morning recap. We're going to look at some trades here on the futures market. We need to go through our standard disclaimer, get that out of the way. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there's a risk of loss. Nothing contained in this recording, other webinars including the live trading rooms are to be construed as investment or trading advice. And of course, everyone in here does know that you do trade at your own sole discretion. Okay, good. Well, if there's no questions on the disclaimer, let's get that out of the way and get on to some charts. As I said earlier, I'm going to try to make this as interactive as possible. And I'm going to start off here with an EMD chart. It was a little cleaner. Oh, let's get this disclaimer off the screen. Hold on a second here. There we go. Off with you, disclaimer. And the first thing I'm going to do is this. Here is the open of the market right here. Cash market's open at 6:30 Pacific, so that would have been somewhere kind of right in here. And I want to have a word about EMD and the long trade that's set up right around the open. You can see here we had a pretty tight consolidation area that was occurring right about in here. Now, if you get bipped into these early trades, either long or short, in this case here you can see that you had a quick little bip up on EMD when it took that out, and possibly you bought the breakout, or quite possibly you got in maybe somewhere down in here on a retracement. What I'm trying... Testing audio. Andrea, can you hear me?
Sounds on.
Sounds on? You got to turn your speakers up, Andrea. I think the sound is on. Yeah. So what I'm trying to show here is this: is that if you bought here on the breakout or on that retracement of support right in here, let's just say that you're long somewhere in here, okay, and your trailing stop would have been somewhere right about in here. See the trailing stop? You can see your initial stop more than likely started somewhere down in here around these dots, depending on where you got filled. And then you would have moved it up into this area right here. So you probably scratched that trade or you took a slight loss. But here's the thing. What we got to do is we got to kind of shake off the dust and get back in the game, right? Because the true direction of this market was not up. You can see that overnight, you had this sort of power blast, and then she consolidated here, and then you got one more pop. So what happens is sometimes early in the morning we start to develop what we call a bias, and we start thinking a market's going to go a certain way. Now we had Bernanke at 7 o'clock Pacific, and we had was it 7 and a 6:45 high energy time. Now I'm going to draw a line on here and ask a question for the team. I'm going to put a line right here at support, and I'm going to ask this question: where on this chart did the short trade set up? Looking for a number. Where on this chart did the short trade set up? Looking for a number. Obviously, everybody sees there was a short trade here, yes? All right, some numbers coming in. Alfie says 39.50. Okay. That's a little aggressive. 37.50, 38, 39, 39, 38. All right, so Alfie is talking about up here. Now, personally, I think that's a little aggressive, simply because if you had taken the long, you would have just been stopped out here, and the ability to flip and get short that quickly would be pretty challenging. In reality, you can see that there are two levels of support taken out right in here. In fact, I recall mentioning and calling out these two levels. Remember I said 37.70 and 37.50? If those are taken out to the downside, we want to be short. That's where these numbers came from. You can see here the pivot was 37.50, and 3770 was this swing of support where it formed a little shelf temporarily right here. Can you see that? So the sell was right here. This is where you sold, this is where you sold short. Your sell order was right under here. Now, when you see areas like this, you want to go ahead and get your order in. You know, put the sell order right in here. When you see this area and it's called out and you know it's time to get short, put your sell in there because this just plowed right through it. In other words, it would have been really tough to come in here and just try to hit a market sell button when it broke, because it just broke it with a vengeance. It just took it out. Now you can see here that your initial trailing stop dots were up here. So your initial stop, most of you know this, would have been somewhere right up in here. Now, a word about trailing stops, and you know, this is not a teaching class. I'm just going to make some mention about it. You can see here that there is a couple of times where the market just comes back and by the wick of a candle can sort of nick the stop dots. See the stop dots trailing down? Now, if you put your trailing stop right on the dots, then quite possibly some of these little candles where it nicks it, and over here, for instance, it comes close to it. We saw some people in the room here saying, well, I got out too early and I missed the rest of the run. Well, in this particular case, when you have a high energy at 6:45 and you got Bernanke talking with Congress at 7, you can pretty much be assured that you're going to get some decent moves. Now, what I'm trying to say is you could have anticipated by what you saw here that this was going to be a runner type day, not a tight, choppy scalper type day. This was very definitely a beautiful short sell-off. So you trail your stop. You leave it 2 or 3 ticks behind the stop dots. Don't put it right on the stop dots. Go a couple of 3 ticks behind it. That way, when you get a nice runner, it just allows you to just let that market run on down. Now, you finally got stopped out down here. Right in here, it very decisively came through this pivot and the stop dots and your stop. So you got taken out around 31.50, 31.60, plus or minus a couple of ticks kind of right down in here. So this first trade was from here, the break of the pivot, 37.50, to approximately where you got taken out right here, 31.60 plus or minus. So doing some quick math, how much was this short worth? If you shorted it here, anywhere up in here, you shorted it, and you covered it down here, approximately, plus or minus. Just put it right on the chart. About how much was that trade, this one short worth? 60 ticks, depending on where you got filled, plus or minus, which is approximately $600. That one trade, that short right there, was worth somewhere between $500 and $600. How many of you took that? I know some of you did. Some of you got out earlier. Some of you got out at the pivots. Some of you got half of it. Maybe got in a little late. Maybe you got out a little too early. It's okay. It's perfectly okay. At the time we were saying quite possibly this could be the one and done trade. But let's say you didn't get this trade, or let's say you got in and you got half of it, or you got 250 out of it, and you're kind of watching this market consolidate here. And there's a couple of areas that I want to show. Here we can see that we were observing the fact that the market was consolidating between 2 pivots. Remember we were saying you've got support down here, 31.50, 31.70. Remember hearing those numbers? They should sound familiar. Remember those numbers? That's where I got those numbers. It was right here. See how it was coming down and checking that little area? Now it spent some time in here. You got to realize you stopped out of that trade around 7:10, 7:11, 7:15. You got taken out. And it spent the better part of, I don't know, maybe 20 minutes in here, in this box. We had time to talk about it in the room, remember? We said, hey, we've got support down here, and we've got resistance at 33.60. Does anybody remember that number? And Gary said, well, why don't you just short it when it's up there? Everyone remember that comment? That's why we were saying that. See, you have this pivot, pivot reverse 2/8 pivot here at 33.60. So you were essentially consolidating up here. So you have, what I'm trying to say is there was a couple of different entries on this second short on EMD. You could have shorted it when it came up and touched this resistance level of 33.60. Clearly, this is the aggressive short. No question about it. And remember we said you're going to put a tight stop about 4, 5, 6 ticks above this, so your risk return is very low. The reason we're saying that is because it's hitting a resistance level. In other words, you're entering the short here. Let me explain what I'm trying to say here. The sell is up near resistance. That's called the probe. You're taking a sell at resistance up here, okay? It requires a little bit of faith in the fact that you're expecting it to roll and break down, and your initial target, if you recall, was 29.70, which is this pivot right here. Remember that number? Can you see the risk return is very favorable on this trade? So you're shorting it here, right, up in here with a tight stop. So your initial stop is just above here. So the risk return is excellent. You're risking about maybe 5, 6 ticks, and your target's like 25, 30 ticks down here. Now, some people have an issue taking probes. Either it's an issue of seeing them or not being able to, or a confidence level up in here because you think it's going to continue up and take your stop out. And that's perfectly okay. If you're one that works to struggle a little bit in seeing and taking the probes, that's perfectly okay because you had another sell down here when it took the support level out. So you can put your sell order right under the pivot just like you did up here. This was a secondary sell. This is more conservative. It's less aggressive than the probe sell up here. No question about it. That didn't happen, so I'm going to take that off of there. Can everybody see the secondary sell as it broke that pivot support in that little shelf there? Can everybody see that? Everybody see that? Remember us calling those levels out? Remember those numbers? They should sound familiar because we were calling them out live as it was happening. And then your initial stop, of course, you would locate your stop dots above your entry, which would be right up somewhere in here. So that establishes your initial risk. And then, of course, you see you would have trailed your stop, trailed your stop, trailed your stop. And then somewhere down in here around 27.70 or so, you would have been taken out. Somewhere in there, depending on how tight or loose your stop was. So here was your secondary sell. Let's say you got filled at the lower level, 31.60-ish, and you got taken out down here at 27.70-ish, somewhere in this circle right here. How much was this secondary short worth? Well, let's do some quick math. Let's see here, 40, 30, almost 40 ticks, right? A little less than 40 ticks. It's called 39 ticks. This is short number 2. Let's call it 39 ticks. And most of you know EMD is $10 a tick, so the secondary trade would have been somewhere around $300 to $400, we'll call it. This was short number 1 up here. So when Gary and myself were saying things like, you know, this is a total monster day and it's just breaking down and it's running all over the place, I mean, even with one contract on EMD, you would have been up somewhere between around $800 or $900. Everybody see this? Pretty straightforward stuff today. When you have nice rolling, running, trending days like this, this is where you're going to make most of your money on days like this. 75 to 80% of your money is going to make on trending days. And you usually get 3 or 4 a week. You tend to get at least 1 or 2 chop days a week where it just goes sideways. Those tend to be sometimes Mondays and Fridays or days where there's not much news pushing the market around. And so, you know, what you try to do on days like that is you want to get out, make a little money, scratch, break even on tight, choppy days. And by the fact that virtue of the fact that this was a trending day, you can see here that this is the kind of day where you trail your stops and you let the market run in your favor, as opposed to more of a scalper day when it's tight and choppy. Does that make sense? Everybody see this? Any questions on the EMD shorts? Entries? For the record, I meant trade setting up the 5/8 pivot entry right where the 4/8 pivot swing, setting up at not entry. Oh, okay. Yeah, this earlier trade, Alfie, when you were calling, mentioning, I think he's had an aggressive entry up here. Yeah, no, you're right. Definitely, you were starting to break support areas on this first short. And the only thing that I was mentioning here is that it might have been a little tough to take a short here, particularly if you were in the middle of a long trade here that flipped and stopped out right here. So you're just in the matter of, and it's tough for some traders when a market stops out to immediately flip and get short. But yeah, down here there was no question it broke support at that pivot, just like it did over here, 3160 area. I think I have a NASDAQ chart. Anybody want to see NASDAQ? Or we can wrap, either way. Anybody want to see the NASI chart? Anybody trade NASDAQ? Okay. A couple of you want to see it. It's a little more choppy. It's not as clean as EMD was today. Now, these two, interestingly enough, kind of play off each other a little bit. Sometimes one leads the other. Sometimes the other leads the other. So, you know, that's why I like watching both. Like on Monday, for instance, EMD led the pack down. And then today, YM, surprisingly, when it broke, actually started to lead the others. So what you want to do, most of you, if you're new, you got chopped on, okay, on NASDAQ. It was a little tougher to trade, Andrea, definitely, no question about it. It was not as clean as EMD. Now, you can see the long trade here just to orient you. NASI is $5 a tick, so it's about half the risk level of EMD from a risk point of view with equivalent stops. And you can see here, just like the other markets, NASDAQ ran up overnight. You got this little short burst. Then we went into consolidation, like such. EMD chops me around, so I don't look at it anymore. Well, that's a good comment, Andrea. She's making a comment about markets chopping around. So what we want to do, is particularly if you're new in here, and we do have some new folks, is you want to take the four equity instruments that we have up. We have NASDAQ, we have EMD, we have TF, which is the Russell, that's also $10 a tick, and we have YM, which is $5 a tick, like NASI here. All trading the September contracts, okay? And what you want to do is you want to take each one of those in Sim and experiment with it by trading it. And what you're going to find is that you're going to gravitate towards one or the other. And you should try to strive to get at least one or two instruments in the morning. And this would be true overnight too. So if you're trading the European session overnight and you're looking at the currency futures like the dollar index, 6E, 6B, or other markets, FGBL, overnight, whatever, you're going to experiment with them and find one or two instruments that you really like to get in sync with, okay? And simplify your charts. You don't need to have 17 charts up looking at every market. You really want to simplify your screens. Just put one or two charts up. That's really all you need. Now you can see that you had a clearly defined resistance area right up in here, and you had a pretty well-defined support area all overnight, pretty much inside of a box right here, yes? Now, what started to happen before the open, and this is unusual for NASDAQ, I don't know, the big boys maybe turned their computers on a little early today, but it started to break up ahead of the open. Doesn't usually do that, but it did today. You can see right here that before the market even opened, NASI was starting to creep up and not only take out its resistance area, but break out through here. Now, just like the other markets, if you were already long from one of these breakout levels, say here or quite possibly over in here, through the pivot right there, all these were valid long entries, no question about it, right at or near the open. You can see that NASI did this funky little sort of bip up here, just boom. You know, just shot like a little rocket up, and it was divergent with some other markets. The other markets didn't quite do. You saw what EMD did, right? Remember what EMD did? That same time, EMD was doing this little sort of head fake blipperoo, if you will, right here. Remember? So as EMD bipped up and rolled over, it started to really, it should cause you to feel some concern about the ability for NASDAQ to continue up. In fact, I don't think the Russell even really broke that much at all. The other markets were not breaking up like NASDAQ did. YM was kind of sitting there stalling around at its highs. And so what that does is that would make you question the validity of whether NASDAQ was going to continue higher. Now, depending on where you got filled in here on your long trade, your initial stop would have been somewhere down in here near the stop dots. See that? Somewhere maybe down in there. And you've got to remember to do this. If you're manually trading, you're going to need to get that stop up as quickly as possible. So as these dots continue to ascend, you would have taken your stop right back up into here, and depending on your entry, very close possibly to break even. Right in here. That's how you manage that trade. And what I'm saying explicitly is that if you're long from in here and you get the BIP and you question the validity of it and you take your stop up tight, it would have taken you out close to break even on that trade, right? Now, NASI was a little tougher to short in the fact that it was not as clean as EMD. Let me show you what I'm talking about. Let's take this same drop on NASDAQ and put it right next to EMD. Here was the EMD drop, and here was the NASDAQ drop on the right. Let's see if I can get this a little bit better. You could make the case that the NASDAQ drop was actually broken into a couple of different pieces. You can see here, for instance, that the prior support area of the bottom of the range would have been somewhere in here, right? Which would have been the equivalent of this area on EMD. Can you see the two support areas from where the breakdown occurred? This was the breakdown in the pivot. And here you had a breakdown area and a pivot on NASDAQ. Now, if you waited on NASDAQ and you didn't short that break, you can see here that it went very quickly into a yellow bar probe just above the 4/8 pivot right here. At the same time that this retrace occurred, approximately 6:50 to 7 o'clock, coming up to when Bernanke was going to talk, EMD was doing the same thing, but a much less pronounced. This retracement on EMD up into the stop dots is equivalent to the yellow bar probe that's set up on NASDAQ over here. Can everybody see that? This was really a yellow bar probe. So if you did not take a short on NASI and you were not already in the trade, very definitely the yellow bar probe set up when it came back down through the pivot right here. Can you see that? Can you see how it came up and rolled? And at the same time that that was happening, if you were watching an EMD chart, you would have noticed this, what we call resumption of selling in a downtrend. On the left is the resumption of selling on EMD, and on the right is the resumption of selling on NASDAQ. Now, Andrea, I'm supposing where you probably got chopped up is you probably were shorting it somewhere maybe in here, or quite possibly when it came through the pivot. I'm just guessing. And if you did that and you had a stop right here, it might have stopped you out first, and then you had to turn around and re-enter it, and then trail your stop on down on the rest of the trade. Is that what happened? Just curious. Is that how you got whack-a-mole around a little bit there? Yeah, I can see how that could happen. I mean, if you got in here, if you shorted the break of support from the consolidation area from earlier, or down in here, and you had a stop at the stop dots, you might have got whacked on that first trade or broken even. I can see where that would happen to you. But in this case here, you see about 5-10 minutes later, the market's rolled over. On EMD, it happened here, and it happened over here. Now, I'm going to quickly recap the rest of this short because the market's moving higher, and I want to go take a look at that. All right, can everybody see the short entry here on NASI? Wasn't quite as clean. The markets are on fire. We're going to look at that in 1 second. Stand by. Yeah, so the sell setup was there. This is short number one. And you probably got taken out down by this pivot down here. So this was short number one. Okay? That was short number one on NASDAQ. Okay, and then we had consolidation And if you recall, we were talking about several levels. At the time, it was consolidating between 2566 and 2570. These numbers should sound familiar in the room. I believe that Gary, he'd have to confirm this, but I think he was shorting it up in here as it was hitting resistance. This is no question a yellow bar probe. But if you didn't take that same area on EMD, of course, was this area right here. In other words, what I'm saying is those three circles to the left on EMD are the equivalent of these circles right here. Here again, if you're nervous shorting resistance levels as it is coming up and hitting its head, getting short up in here, then very definitely you had a clean, clear sell when it took out support at 70. You would have put your sell order just a tick or two underneath that support level here, and you would have been filled on one of these bars right in here. Somewhere in there was your sell. And of course, you can see you trailed your stop, trailed your stop. Here's your initial stop just above where the stop dots are, somewhere up in here. And then as it dropped, as it dropped, as it dropped, as it dropped, you probably got taken out somewhere, possibly down in here. Everybody see that? That was the short. That was short number 2 on NASDAQ. I just can't see that when it's happening. Well, I don't know. We're going to have to work on that, Andrea. We try as best we can to call out these areas and observe it when it's happening. Today they were a little cleaner, admittedly, on EMD, but I know you don't like to trade EMD. Some people don't like that instrument. I like to, even if you don't trade it, what you might want to consider is putting a chart like that next to it, or find something that's leading the market. Up or down, say YM or Russell. Even if you don't trade the Russell, sometimes the Russell leads the other market and makes you more comfortable taking the short setups. You're right, Rob. Practice makes perfect. Screen time will help. The more you work on seeing it, and I would suggest a couple of things that if you want to go back and take a look at these markets, what they did early, and sort of reconstruct the trades in your mind, in your mind's eye, reconstruct the trades. And as you see this type of pattern, these types of patterns set up again, say tomorrow morning or next week or later on this week, these will become more familiar, and it will be comfortable coming in and putting the orders in and taking the trades. Now let's take a look at what's going on right now. Before we do, does everybody see the shorts that's set up here, the short trades? But this one here, let's say you got filled at 76 and you got out at 68. 76, 68 is what, 8 times 4 is 32. So one contract on this short number 1 for NASI was about 32 ticks, approximately, depending on where you got filled, which is the equivalent of about $160 per contract. So you can see here, for instance, for the equivalent drop on NASDAQ, you make, depending on how you manage the trade, about half the money that you do on EMD. But you got to realize when we say that is also equivalent to risk. When you get stopped out on NASDAQ on a 12-tick stop, it's only $60. When you get a 12-tick stop on EMD, it's $120. So you have to look at the size of your trading account and your appetite for risk. If your risk level is tolerate is such that you can take a $120, $150 pop on EMD over here on a trade, then by all means trade it. If you say that's a little too pricey for me, then you got to look at a $5 instrument like your NASDAQ or your YM. This drop over here, let's say you got filled short of 66, and you got out down here, maybe call it 52. 66 to 52 is 14, right? Times 4 is 56. So short number 2, let's call it 56 ticks. And it's $5 a tick. So that's the equivalent of what? 200 and, what is that?
280.
280?
Yep.
Right? approximately?
Hey, Charles, one thing just real quick, too, for Andrea. I kind of taught in the webinar last night, too. See how on EMD where you had that first thrust down on that first short to, what, 929.70 approximately where that pivot's at? Well,
Oh, this one over here, Gary?
Yeah, and, well, down there where your first, where you're at 929.70 on your pivot. That
Oh,
first thrust
29.70. Down here?
all the way down, right?
Oh, right in here. Okay, got it. Yeah, right in here. Right there.
Yeah. Now, see, that was actually, at that particular moment, support because it bounced. But once it took it out on the other side of the equation there, when the chart turned red again, notice how when it came down to 925.80, it bounced right back up to 929.70. A broken support floor then becomes resistance on the next trip up. You'll see that over and over and over.
Yeah, today, as I said, on EMD, the pivots were spot on, particularly in this consolidation area here. I mean, you know, it was pretty clear that it was consolidating in here, and, you know, we were kind of looking for, well, first of all, guidance was short, so we were thinking short. But you were pretty much kind of looking for a break either direction. When you see consolidation like that, you're saying to yourself, at least I do, you know, what direction is she going to go? I mean, we definitely had a short bias given the fact that the markets, cash markets had dropped, the Dow and S&P went negative, everything was down. Bernanke was saying it's the end of the world. I mean, it was just screaming to get your sell order right in here. Same with NASI. Remember we were saying, look how it's just oscillating around that 25.68 and a quarter, 68 and a quarter pivot, slightly above it, slightly below it. Remember? I don't know if you remember that. We were saying that as it was happening. So we try to observe and call these areas as best we can. But anyway, so that's how it played out. All right, do you want to see what's going on now? Or is that a wrap? We've got about a half an hour here. A little longer than expected. Anybody want to see what's happening now on these two before we wrap up? All right. Okay, let's see what's going on over here. No, smack-a-bony. No, smack-a-bony. All right, good. Tell you what, let's do this. Let's do this. Let's do a quick question for the team here. Let's blow this. Let's blow up the EMD chart. Let's do a quick question for the team on NASDAQ. Let's do a real-time question here on what you see. What do we see on EMD here? Let's start on the left. Was there a long trade entry somewhere between, call it 8 o'clock and 8:20? Oh, the Bund, German Bund. Yeah, I'll try to dig that chart up in a little bit, Rome, before we close. Do we see, if you see a setup on a long trade here on the left-hand chart on EMD, go ahead and call it up for the team. Just go ahead and type it in there. What do you see a long trade setup here somewhere? Let me help you out. How do you know a trend change happens? All right, 9:31, 9:30, 8:32. Okay, good. All right, well, let's quickly review how you might have discerned that the trend may have changed. Now, what I see, if you get a V-shaped bottom, which of course we had here today, that you notice that what I sort of look for is I look for critical swing areas and pivots. So for instance, down here, you can see we just touched 25.80. Now, if this was going to be a yellow bar probe to the downside as it came up to this pivot right here, then this area should have held as resistance, and the market should have broken down here, like such. That would have been a trend continuation to the downside. Likewise, if you extend this line upwards further, like such, you want to do that at about a 45-degree angle approximately. You can see that when the market started to hit its head here, that if that was a blue bar probe to the downside, that the market should have rolled over and started to sell off here. Can everybody see that? When I start to see 1 or 2 or 3 pivot levels and some swing areas being taken out to the to the upside off a bounce like this, it starts to be a flag to me that a potential trend change is afoot. Now notice we get one final thrust from pivot to pivot up through here, like such. And then we go into a retracement. Now this happens to be one of our favorite trades. This is the first yellow bar probe after a trend change, and the percentage of accuracy of taking this trade is very high. You can see here that we pulled back, we found support at the pivot, right in here, which was the prior breakout area, yes? Here again, getting back to this notion of support and resistance. Prior resistance now becomes support. Now, if you got long anywhere in here on the pullback or the breakup, your initial stop would have been somewhere down by these dots. Long. You're taking the long breakout, okay? Does everybody see that? This is probably one of the highest likelihood trades that we have when they come along. They don't come along a lot. They do sometimes. And when they do, you really want to jump on them because this was definitely a trend change to the upside with the first yellow bar probe. Anyway, moving forward, trailing your stop, trailing your stop, trailing your stop, and your trailing stop quite possibly would be sitting somewhere right in here right now. And now it's breaking up to the upside. Everybody see the long trade here? Any questions on it? Now, if you were more aggressive on your stop, another way to manage your stops are to take it at or near the stealth line. So you quite possibly could have taken your stop up into here. Either one, perfectly acceptable stop location. Now, you have another pivot up here. This could be a target for you. If you see sometimes in the educational room and in the pro room, we'll talk about targets. Right? You could box the trade in. So in other words, you'd put a sell, you're long, you'd put a sell up here, and you'd box it in with your stop as it moves higher. Likewise, you can see the same thing happen on NASDAQ. Now, the retracement on NASI was less pronounced. Here we have our thrust off the bottom. Comes right up to the 12 range guidance dots. Pauses in here for about 10, 12, 15 minutes. And you can see here that it checks support a couple of times, sort of down in here. See how the 2/8 pivot reverse, prior resistance now becomes support. And you could have bought there, of course, or you could have bought the breakout. Does everybody see that? Now, the reason we have these dots in here, you have the trailing stop dots and you have the swing high-low dots. I really personally like when the swing high-low dots or the trailing stop dots, either one, stay in a fixed position for a certain amount of time, because when you see that, it clearly defines a resistance or support area, and it's just begging for you to put a buy order right there. You would have been filled somewhere on one of these bars right in here. And of course, you see your initial stop would have been somewhere down in here. You're filled. Here's your stop dots. And then, of course, you'd be trailing your stop up. Your trailing stop would be sitting right about there now on NASDAQ, on the long trade. Alfie says, I would have definitely taken the breakout trade. Yeah. Yeah, well, you can see what's nice about having these two next to each other, and that's why I was saying find one or two you really like. Maybe you like YM and TF, okay? Maybe you like NQ and TF. Maybe you like EMD and NASDAQ, like I do. Find two. You don't have to trade them both. What you're simply doing is you're finding two markets that should sort of coincide with each other. One might lead the other one. It can provide a little confirmation when one starts to break. For instance, over here, when you got the buy signal long on EMD, it quite possibly might have preceded the buy order signal on NASDAQ. Either way, you were looking to get long here, right? We're going to come up and hit that pivot. There you go. You'd be boxing it in right now. Get your stop up. You'd be taking your stop up here. See the stop moving up? Here's your pivot. Here's your 4/8 pivot on NASI. Quite possibly be boxing it in. That's a nice little trade. Nice little run here at the end of the morning. It doesn't usually happen like that. There's your stop on NASDAQ. Or take your profits at the pivot. Now, if you take profits at the pivot, Don't feel bad if it blasts up 30 ticks more from there. I know some of you were saying earlier, take the money, says Alfie. Well, you're watching it live. We were talking about this, right? If it came up and nailed these pivots, you want to get out, quite possibly. Bank your coin. Because let's see, from down here, let's suppose you got filled, where you could trail your stop. Here's your stop, moving up. Move your stop up. Looks like it might blow right through those, huh? Right at them. Alfie says take the coin. Bob says he'd bet money that Gary took the Russell long. Are you trading this, Gary?
I got a little under 10K for the day.
Sweet. Good for you.
I just saw an order come in on HP for about 27 more printing presses for orders for trillions of dollars. So I think our economy's in safe hands.
QE27, pump another trillion in there, see what happens.
QE27. Let's go for it. Print another trillion.
What's another trillion between friends? All right. Yeah. Well, this actually turned into be almost kind of like a little bit of a webinar here. I didn't really anticipate going into this level of detail, but hopefully this helped some of you see how these trades are setting up and when you can. You got to. We have several webinars that talk about this. I have the subscriber area. If you're new to Viper and you're still picking up the terminology a little bit, and you're trying to see the trades and all that sort of stuff, really you should log into this back area. You can start with the Trader's Kit. This goes through all the risk. I don't know why this keeps doing it. It dumps me over to some stupid college site. Don't enable. Stupid thing. Anyway, this goes through all the risk management, set up an installation, breakouts, probe trades. But the meat of what you want to look at is really down here, all right? You take these first 4, 5, 6, they're about an hour. Download these puppies and watch them because you're going to pick up the terminology, you're going to pick up the setups, you're going to become very quickly acquainted with where to put breakout trades, probe trades, where to put your initial stops, how to trail your stops, all the trade management you need, breaking old habits, stop losing money, avoid the chop. These are all great. All these Saturday, Wednesdays. And then the pro webinars are down here. You should download, if you have time, about a half a dozen of these puppies. I think you did one last night, right, Gary? Is that this one?
Yes, that one.
That's a good one. Trendline Trader, minimize your risk, trade the zones. I think Rich did this one. This is a pretty good one here a couple weeks back. Download, if you got time, you really should 4, 5, 6 of each of these. Set yourself aside 8, 10, 12 hours and really just power through these. And you know what? When you get in here and you start looking at the charts and you start getting your own charts set up, the trades are going to become a lot more clear to you. They're going to jump off the screen. Bob, we don't have a webinar tonight, and there's no Euro Room because Rich is off this week. But we do have one tomorrow night, 5 o'clock Pacific. That's the Wednesday, Saturday ones. Wednesday night, the next one is tomorrow night, the 18th. And then we have a pro webinar. We had one last night and another one on Thursday, 5 o'clock Pacific. Yeah. If you have time and you want to power up, seriously, you want to download a half a dozen of these puppies, put them in a folder on your desktop, and when you have a spare hour or two, go in and watch them. And I'm telling you, so many people that did that and they power up, within a short span of time, a few days, a week or two, you'll be totally up to speed. And when you start to see trade setups like we have here, long, short, short, long, the setups will become a lot more clear over time. Minaj, I think it was a little over 10K. I don't think he showed it. I think he said it was a little over 10K today on the P&L for Gary. I think, he cleaned up on the equities, and I think we had a monster, wasn't that a monster crude oil short?
Oh, yeah.
That's before you made a chunk of your coin, huh? Big chunk of it.
Absolutely. And on that, when NQ rolled over there, I had 4 contracts on that as it was rolling over. Took the one to dip the toe, and I kept saying when I was getting in it, and then when it broke the trend line, I added again.
Now, here's some good feedback from Bob. Bob's been with us quite some time, and he says 1 week and a weekend of downloading and watching the instructional videos work perfect for me. And now I'm totally up to speed. There you have it. Yeah, you can, Alfie. These download links, man, these markets are on fire. Smack-a-bony. It's taking the pivot right out. Trail your stop. Trail your stop if you're in these trades.
They turned on the printing presses, I'm here to tell you.
Well, the cash markets have gone positive. The Dow's up 58.5 now. Yeah, Alfie, so how it works here is you simply click on this download link. I'm not going to do it because it's actually going to start downloading the webinar. But this will actually put it right on your desktop, so when you watch it in Windows Media or your whatever player you have for the WMV movies recordings, yeah, and you'll be able to watch it again. Or you can download a half a dozen of them, put them on a file folder on your desktop, and then later on when you have time, let's say you download 6 and say, okay, well, I got an hour and a half later, I'll watch, or I got 2 hours later on today, I'll watch them when I get time. And like Bob said, that's all you need, 1 week and a weekend. Some of you might be a little longer. It might be 2 weeks and 2 weekends. But if you set aside the time to watch these, I'm telling you, it's going to make a huge difference in your trading. It really does. Market's still running. Take running days like this and you let it run. This is where most of your money's made in your trading account. Long, nice running days like this. This is where the coin is made. We had the nice shorts that set up earlier. A lot of traders in the room here came and went already. They made their money. Some are sticking around. And if you didn't, you had some long opportunities here. All right, thanks for coming, everybody. I'm going to stop recording.